Hey there everybody, Jack Hawthorne here, CEO at Keller Williams Heritage in San Antonio, Texas, and I'm making this video as an update to the Fed rate hike that happened earlier today. So as you probably already know, the Fed increased rates by 0.75%. That's actually a good thing, and the reason for that is because the Fed was slow playing interest rate increases for a while, hoping it would help with inflation. What happened then is that inflation numbers came in way worse than they expected. They realized what they were doing wasn't helping, and so they made much bigger jump so that it's going to make a bigger impact. This is the fastest way to get the economy back to where it needs to be and to a healthy rate of inflation. What's going to happen in the real estate market is that you're going to see interest rates go up. We're going to be at 6% as of essentially now. We'll probably be at 7% in the not too near future. We may even be getting close to 8% toward the end of the year, depending on what happens. But what that does mean is that as you go out and buy property, we're still probably going to have a decent level of appreciation, or we may have some stagnation in prices. But remember, in San Antonio specific, and it's important you take that because real estate is hyper local. I'm not giving you advice on what to do in New York, and I have no idea what to do in Wyoming. What I do know is that in San Antonio during the Great Recession, we grew a little slower. So instead of our normal rate of appreciation, we only appreciated 4% a year. So what's going to happen if you keep holding off to buy property is that you're going to say, well, I'm going to wait until interest rates come back down in 18 to 24 months. Well, that's a great plan, except that house is going to be proportionately more expensive. You're probably going to end up paying exactly the same amount, and you won't have the house. Whereas you could buy the house and then just plan to refinance in 2 or 3 years with lower interest rates. Then you've secured the property you want. You've taken advantage of that appreciation. You've been able to take advantage of the depreciation on your taxes, and you're going to be able to refinance to a lower rate down the road. So that's really what we want people to know, is that this is very healthy. You can usually tell, and it's really funny. You had an interest rate hike and the stock market spiked, which is crazy. But what the stock market was looking for was for the Fed to do what was necessary to actually make an impact. So as we go forward, the things to take away from this is that you're expecting at least 1 to 2 more major rate hikes this year to help fight inflation from the Fed. You should expect interest rates to continue going up. So if you're looking to buy real estate, you should be acting as soon as possible to lock your rate and then go shopping for a house, because interest rates are not going to get better anytime soon.